Welcome to this video on Forex trading, where to get in and where to get out. These are the two most common questions that I receive from traders, and they're good questions. I mean, really, that's what trading is all about. Where to get in, where to get out. You want to buy low, sell high, and conversely, short high and cover low. So, these are important questions and very practical. Let's jump into it and show you a very practical, objective way to do this. So what we're going to do is, on this particular chart, we see that the market's been, it's kind of going sideways for a while. And then, all of a sudden, the market takes off and we get an impulse move. Here it looks like it's going to take off. Well, it actually does, but then it retraces that entire move pretty much. And then the real move occurs here. And now we get an impulse move. An impulse move is what's considered a strong directional move. And this is very common for the market to go from consolidation to expansion, or contraction or low volatility to expansion and high volatility. So that's the first thing we look for, is a big move, because we want to have confirmed that, okay, the market's really moving, there's people participating in this thing, and now the question is, will it resume, and where are we going to get in? So the way that I do this, one way, there's several different ways, is we go and use our Fibonacci retracement levels. Okay, very, very common tool. And we start with the low of the move, and then we go to the high. And that's our impulse move right there. Whoops, lost my lines. Okay, let's try that one more time. So we go from the lowest low of the move to the high. There we go, now it's stuck. And a question I get here, so let me answer this right now, is how do you determine which highs and lows to use your Fibonacci retracements? And my answer to that is, first of all, Fibonacci retracements are percentages of an impulse move. So really, it's relative. It's all relative. There's no actual wrong place to draw these highs and lows. But it will measure the retracement levels of whatever impulse move relative to that. So I'm going to, however, suggest that you might want to do it this way. Look for the highs and lows that stand out visibly on the chart. So here on the chart, the lowest low is here. The highest high is here. This is going to stand out to everybody trading this time frame or a similar time interval, and therefore it has a bit of a self-fulfilling prophecy, because that's where a lot of other people will be drawing their levels as well. Right now, different time intervals, of course, you'll have different Fibonacci levels, but you trade based on a time interval, and all your trading is done relative to that time interval. So you can't mix apples and oranges like that. You can use them to compare, but you've got to take your trade setup based on one particular time interval. All right, so there we go. That's how we do that. Now, we look at our retracement levels, and we've come back down to 50%, halfway. And we're holding support there. So first thing to say is that Fibonacci retracements in an uptrend such as this are used for support levels, not resistance necessarily, although they can provide resistance, but their primary role for us is to provide support levels. And those support levels are areas where we will then consider to buy the market. So we're used for entries. They're used for entries. All right, so that is that. Now the market starts to go up. Okay, so now once we get here, if we bought, we've got a nice, again, you've got a little bit of consolidation here between these two levels, and then boom, the breakout. Okay, so now the market is moving back in the direction of the original impulse move. So now the next question would be, okay, where would I look to get out? Where should I place my target for exits? Now we use our Fibonacci extension tool. And this is a three-point tool, so we start with the first 2 points, 1, 2, the exact same 2 points. Then, though, you've got a third point you have to do, and you draw to the lowest low of that retrace. And now what it will do is it will draw resistance levels above the high of that impulse move. And that's what we're going to be looking at, those resistance levels for our targets. So right now they're off the chart. So it went up here, provided some resistance, but of course not big profits there yet. We're looking for a move beyond the impulse move, above it. And there we go. So it went to 100% and bounced right off it. So that's a great target to take either partial or full profits. Plus, it provides a good risk-reward ratio. So look at your reward. Your reward is that, and your risk was essentially that. So nice risk-reward ratio. So that's how I use Fibonacci retracements for entries and for support in an uptrend, and Fibonacci extensions for targets and resistance to take profits to get out of the market. Now, one more thing here. We don't have time to cover it in this particular video, but this topic was where to get in and where to get out. The other issue is when to get in, when to get out. And that has to do with the price axis on the bottom. The chart has two dimensions. It has price on the y-axis, and it has time on the x-axis. That's it, 2 dimensions. That's all we got, 2 dimensions to work with. So got to know both dimensions. So doing a webinar, I usually do a webinar once or twice a month, sometimes more often, where I talk about the time axis. Now, this takes about an hour, so it's beyond YouTube video, but I offer it for free. So if you'd like to get on that, just send me an email to barry@topdogtrading.com, and if there's one coming up in the near future, whenever you email me, I'll be happy to invite you to that. I actually give you my cycle indicator for free, and I teach you how to use it. We give about a 30-minute tutorial on how to use it, how to distinguish profitable signals from just noisy signals. So I'm happy to do that for all my YouTube friends and, well, anybody watching this video. So if you like this video and you're watching it on YouTube, please click the thumbs up icon below and leave a comment. That encourages me to create more free tutorials like this for you. And if you have any suggestions of what you'd like me to do in the future, any topics you'd like me to cover, I'd be happy to do that. Just type it into the comment section below. Also, I'm giving away one of my free trade strategies called the rubber band trade. It has a very, very high win-loss ratio. I'm going to give that to you absolutely free. You can learn in about 26 short minutes on a video that will explain this. You get it by clicking on the image in the top left corner, or if you're on a mobile device, click on the little eye with a circle around it in the top right corner of this video. And once you do that, I will personally email the video to you.